Very good. Let us begin with Jens Nordvig. I want to do a chart now. We'll do the pandemic with Jens Nordvig in our next block. His work is just absolutely inspirational there. When the facts change, the market changes. The fact is there's a wall of cash out there, and we saw the stunning move of the two-year yield today through 0.10%. Jens Nordvig of Exante Data synthesizes foreign exchange and rate analysis like no one out there. His book on the euro was prescient and requires a reread. Jens, good morning. I want to talk about the two-year yield, the wall of cash. Jan Loy's over at JP Morgan has a vector to lower and lower yields. What do the inflationistas have wrong?
Well, so we have a liquidity effect going on in the short end of the curve. It's very ironic what's going on. Like we have all this talk about potential overheating of the U.S. economy, and the long end is moving up. But actually, over the last several months, like we've had a downward drift in the short end, right? So this cycle is different from any other cycle, and the same holds to the short end of the curve, which is really being compressed down towards zero. And there's a risk even that we can go into negative rates in the U.S. by this extra release of liquidity that's coming from essentially some technicalities about how the U.S. government managed its deposits at the Fed, and they are now being released. So it's a very interesting situation where we have concerns in the long end and opposite dynamic in the short end. And it's certainly impacting markets, and the currency market is one of those that are looking very closely at this.
How do you link dollar dynamics into what I presume will be a significant and rapid curve steepening?
Yeah, so I think when you look at essentially the relationship between what's going on in rates and what's going on in FX, we tend to look at essentially when you have a parallel shift in the curve, the whole curve moves higher. That's something that's very powerful for FX dynamics. But at the moment, you have like something that's very different from that. You have the curve steepening very dramatically, and that doesn't tend to support currencies very much. The dollar is a currency as well. It doesn't tend to support the dollar that much, if at all. And it certainly depends on the crosses, right? You can also see what's going on now. You talked about the UK in the intro that has now its own sort of bullish dynamic going on around the vaccine rollout there. So in the UK, actually, the short end is starting to move higher because at least the cuts that were priced there are being priced out, right? So we have a lot of talk about the US being exceptional, but it's also exceptional in the sense that they have actually the rates in the short end that are going down the most at the moment, right? So that generates actually a bearish argument against sterling, for example.
Yeah, and yes, I want to talk about sterling in a second, but if we go back to, dollar dynamics that Tom was alluding to, what happens if we have a negative print on the U.S., two-year yield, for example?
Yeah, so I think the most important segment for the dollar on the curve is the short end. Like there's a lot of players that will be paying attention to what does it cost to hedge, right? And people could typically hedge for 3 months to 6 months, right? So all those short instruments that are going to be correlated with each other, like what's going on in the T-bill market is going to be correlated with the FX forwards, and those are the FX forward rates that hedgers have to pay. So it is directly relevant to what's going on in the currency market, and therefore it's something that we should definitely pay attention to. Obviously, we're not talking about hundreds of basis points of move, right? We're talking about maybe 10 basis points of a shift we can have, but it's still relevant, and it's especially relevant because a lot of people have gotten so focused on the move in the other direction in the long end, right? So it's really countering that, and it's dramatically weakening the argument that the move in the long end should support the dollar, because we just have this very unusual situation where we literally go in the opposite direction.
Jens, going back to actually what we're seeing in the UK and the big move in sterling. So, of course, it's partly because of what COVID vaccinations are looking at, which is here in the UK really far ahead anyone else in Europe. But how much is there also a belief that now that Brexit has happened, the UK will slash taxes to become a kind of Singapore on Thames?
I think, to be honest, the vaccine rollout is very important. If we think about, okay, what is 2021 about? 2021 is about investors hoping and expecting reopening, and it matters greatly whether you can reopen in March or whether you can reopen much later, right? And the UK now is on a track where we think the hospitalizations should start to really see an impact from this vaccine rollout within weeks. And when I say hospitalizations, I mean the proportion of people who get infected who have to go into the hospital. I think that's the key policy metric that people are going to look at. If that really starts to come down, that means that we've turned the corner. The vaccines are working. I think we'll see concrete evidence of that within weeks. And once that is seen, we will have the reopening announcement. And the UK is going to be ahead there, and I think that's going to be very important for how sterling trades. It already is important. In addition to that, we've had essentially the negative rate debate in the UK within the Bank of England has been put on hold. We're not going to have negative rates within 6 months. That's what was said at the last Bank of England meeting. That was also important. So I think those two things are important. And then obviously we can have discussions about what's going on with Brexit. We've seen many anecdotal stories about it's how to fill in the paperwork and so forth. I think that will be resolved. So we are sort of in a sweet spot where actually most of the factors are stacking up bullish with sterling. And I think for the next couple of months, that will be the driving force.
Tom, the only pushback, and I know we'll speak to Jens a little bit more about that, is actually the UK, let's remember, I think is one of the only countries in Europe where schools are still 100% closed. So the idea that it can reopen very quickly is we're in so deep lockdown compared to France and Italy and even
I think
Germany
compared to
now,
here as well.
that, you know, I would just caution a bit of how quickly the UK can get back.
Well, all of our viewers and listeners know it is a huge deal. We're going to come back with Jens Nordvig on his ownership of pandemic analysis. He's really been wonderful at Exante.